Charles Chaw, Director at China Knowledge Consulting. Charles, it's interesting times. I mean, the fact that CNOOC, reports are saying that CNOOC might withdraw, I guess it does make sense from an investor point of view. If you look at the shares, they're afraid that CNOOC might be paying too much.
Looking at share price today, this morning in Hong Kong stock market, up 6% is a clear indication investors, analysts, fund managers want CNOOC out of this deal. It's an expensive bid and it's very problematic. The right thing to do for CNOOC, as I feel, is that go to the exploration in Indonesia or other countries like Australia or even Khazastan. Why a high price for UNOCAL? It doesn't make much commercial sense. You see, I think the CNOOC acquisition was a national policy, because the consumption of natural gas in China is about 3%, and then there are plans to do it, to reach 10% by 2020, which is clean energy. But again, because of national policy and its conflict with commercial interests, I think it's better not to because of national policy, to acquire UNOCAL at such a price.
Why do you think CNOOC is pulling out now? Because up till now, we know that the Chinese oil giant has been so aggressive in pursuing its bid. What was the turning point?
Christine, the heavyweight players is the Congress, which is the American government. No, and it was obvious. A bill was passed by President George Bush of 3 months, and there are roadshows by Chevron, to shareholders, and I think it's
so that was the turning point.
Yeah, it is a very tough deal, and it's better than CNOOC to focus on other explorations, other joint ventures. Look at Malaysia. The Malaysian government is very keen to sell natural gas to China. Why not look on that?
If you look at the bidding contract, it's very complex. What does CNOOC actually stand to lose if they pull out now? There's the $2 billion in the escrow account. In terms of expenses, can you run us through how complex the whole procedure is going to get?
The legal procedures is very complex. There's a breakup fee of $500 million. For the legal aspects, I wouldn't want to comment because it's really complex. But it's better to walk away now and then focus on other explorations, on other opportunity, rather to delve in it, and the earlier the better.
Okay. In terms of other explorations and other opportunities, there's a lot of talk. Earlier this week, Woodside shares in Australia were actually heading up. A lot of people saying Woodside could be the next target for CNOOC. In terms of that fit, how do you see the fit between CNOOC and Woodside?
Again, it's a question of pricing, and if it's Australian acquisition, I think it's less complex. From our perspective, the acquisitions of UNOCAL doesn't change much. It's the people saying it's change of ownership of oil fields and natural gas field. So and UNOCAL contribute less than 1% or almost 1% to U.S. energy consumption or needs. So this acquisition has to be a government-friendly one in order to make it a success. Do
you think the Australian is government-friendly? Do you think CNOOC is likely to face the same regulatory hurdles in Australia if they were to pursue Woodside?
I mean, look at some time ago there was a big acquisition. I think it was the $16 billion LG thing, liquefied natural gas. I think another acquisitions, it shouldn't be a big problem, and it's not a hurdle. It's again questions of price.
Okay. Any other options at this point before I let you go? Any other options you think CNOOC can pursue?
From investment bankers' point of view, is to acquire direct in the oil field, like natural gas field, rather than to pay a high price.
But how many of these gas fields are there?
Of course, it's a question mark. It is a bet. Nobody knows. But even if it's a successful acquisition, look at managing American company. It's very, the culture of management. There's big issues. It's not an easy deal. Rather walk away and focus on other.
It is a very complex deal, Charles. As always, thank you very much for your insights. Good talking to you. We've been talking to Charles Chaw from China Knowledge Consulting.